Have you ever noticed something? All around you, there are people who are genuinely talented, highly educated, logical, disciplined, great at solving problems, yet they're not wealthy. Some are even drowning in debt. And on the surface it doesn't make sense. These are the people with the degrees, the credentials, the good jobs. They can analyze data, solve complex problems, and perform at a high level. So why do so many of them still struggle with money? Welcome to Quiet Wealth. Today I'm going to speak plainly, no hype, no promises, no get-rich-quick fantasy, because this is the kind of truth most people never learn in school or at work. This is educational content based on personal perspective, not financial advice. Always do your own research and make decisions that fit your situation. If you want more content about building wealth quietly and intelligently, consider subscribing to Quiet Wealth and turning on notifications. And if anything I say resonates, hit like. It helps this reach the people who need it. Here's the core idea. There's a difference between being educated and being financially intelligent. Education can make you competent, impressive, and employable, but financial intelligence makes you free. And the reason so many educated people stay financially stuck isn't because they're dumb. It's because they're running the wrong operating system for money. The first brutal truth is this: most educated people are trained to work for money, but not to make money work for them. From childhood to college, the system trains you to follow instructions, hit targets, and earn credentials so you can get a job. And getting a job isn't bad. The problem is that the education usually ends there. Nobody teaches you how assets work. Nobody teaches you how ownership works. Nobody teaches you how to build a structure where your money produces more money without you trading every hour of your life for it. So what happens? You get the good job. Your income rises. Your status rises. You feel like you made it. But in reality, you've just upgraded the treadmill. You're still stuck in a model where your financial life depends on your presence, your health, your employer, and your time. And time is the one asset you can never earn back. If your wealth depends entirely on your labor, you might live comfortably, but you're still not free. Real financial freedom is built on ownership. Ownership of productive assets, ownership of businesses, equity, real estate, or any system that can generate income without requiring you to show up every day. You don't need to become a billionaire, but you do need to stop building your life on a single faucet called salary. Because if that faucet shuts off for any reason, recession, layoffs, burnout, health, everything shakes. That leads to the second brutal truth. Lifestyle inflation quietly destroys educated people. When you have credentials and a respectable career, you start feeling pressure to look the part. Nicer car, better neighborhood, bigger home, more expensive everything. You're not just buying things, you're buying identity. You're buying proof. You're buying the feeling that you're doing well. But wealth is not what people see. Wealth is what they don't see. People see the car, not the loan, the vacation, not the credit card balance, the nice home, not the stress behind the monthly payment. Educated people often become experts at appearing successful while their net worth stays flat or goes backward. Here's the line that will save you years. The desire to impress is a tax. And it's a tax you choose to pay. Every dollar spent to look rich is a dollar not invested to become free. Consumer culture is designed to turn your future into someone else's revenue. If you don't build margin on purpose, you won't accidentally become wealthy. Your lifestyle will expand to match your income every time. The third brutal truth is that school teaches you to fear failure. And that fear makes you financially passive. In school, failure is punished. Wrong answers mean lower grades. Lower grades mean judgment. So you internalize a rule. Avoid mistakes at all costs. But money, markets, and business don't work like school. In real life, mistakes are part of the process. The goal isn't to never fail. The goal is to fail small, learn fast, and stay in the game. I've seen brilliant people freeze because they want certainty before they act. They keep reading, keep researching, keep waiting for the perfect moment. They call it being responsible. But often it's just fear wearing a suit. In markets, there is no perfect certainty. There are probabilities, and if you wait for perfect clarity, you'll watch opportunity pass through multiple cycles while your money sits still. This doesn't mean you should gamble. It means you should take intelligent risk, controlled position size, clear downside limits, And humility. Because the biggest risk isn't losing money once. The biggest risk is never building anything because you were too afraid to be wrong. The fourth brutal truth. Educated people can become overconfident in credentials and underconfident in common sense. This happens all the time in finance. People fall in love with complexity. They assume complicated equals advanced, and advanced equals profitable. They get pulled into strategies they can't explain, products they don't truly understand, and narratives that sound smart. But money doesn't care about your degree. The market doesn't reward you for sounding intelligent. It rewards clarity. If you can't explain what you own in plain English, what it does, how it makes money, what could break it, then you're not investing. You're buying a story. And in the US market, stories are everywhere. Hot sectors, next big thing, themes, viral trades, influencer portfolios. People confuse popularity with value. They confuse movement with meaning. And complexity becomes a shield. If it goes wrong, they can say, it was sophisticated, but your account doesn't care that the loss was sophisticated. A loss is a loss. The fifth brutal truth. Most people obsess over income and ignore net worth. You'll hear people say, I make $150,000, like that's the scoreboard. But the real scoreboard is what you keep, what you own, and what compounds. A high income with high fixed expenses is fragile. It looks powerful until something happens: job loss, illness, family issues, recession, market drawdowns. Then the whole structure wobbles. Net worth is what buys you options. Net worth buys time. Net worth buys peace. And until you build assets, even a great salary can feel like a cage with nicer furniture. If you want a simple reality check, ask yourself, if you couldn't work for 6 months, what would your life look like? If that thought creates panic, then your financial system is built on income, not wealth. The sixth brutal truth. Educated people often wait for permission to start investing. They want one more course, one more credential, one more book. They want to know everything before making a move. And learning is good, learning matters. But preparation without action becomes a trap. You don't learn your real risk tolerance from a textbook. You learn it when your money is involved and your emotions show up. You learn it when the market goes against you and you have to decide whether to panic or follow a plan. You learn it when you feel greed and you realize how easy it is to abandon discipline. That's why the best starting strategy is not start big. It's start small. Start with rules. Start consistently. The seventh brutal truth. Job security is an illusion. Even in safe careers, people pursue degrees because they want stability. But the world changes quickly. Industries shift. Technology replaces tasks. Companies restructure. Your job can be secure for years and then disappear in one quarter. If all your financial strength depends on one income stream controlled by someone else, you are vulnerable by design. Financially aware people diversify not only investments, but capabilities and income sources. That doesn't mean you need 10 side hustles. It means you need a plan that doesn't collapse if one paycheck stops. The eighth brutal truth. Many educated people pay too much for bad advice because they trust polished professionalism. They assume a nice office and confident language equals competence. But finance is full of incentives, fees, commissions, product sales, and activity that looks like help but often serves the seller. Not every advisor is bad, but you must understand how advice is paid for. Fees compound in reverse. A small percentage each year becomes a massive difference over decades. If you don't ask the right questions, you can work hard, invest consistently, and still underperform because too much value is extracted from your returns. The ninth brutal truth. People understand compounding intellectually, but they don't have the emotional patience to live it. Compounding is slow at first, so slow it feels pointless. Like planting a tree and staring at soil. That's why people quit early. They chase fast wins. They jump strategies. They interrupt the process. But most life-changing financial outcomes happen after long periods of consistency. In US markets, cycles come and go: hype, fear, booms, crashes. The crowd becomes euphoric at the top and terrified at the bottom. People buy when the story is the prettiest and sell when the pain is the loudest. The investors who build wealth steadily tend to be boring, in the best way. They don't need excitement, they need a system. And that brings us to the 10th brutal truth. Most people are taught what to think, not how to think. School trains you to find the correct answer in a structured environment. But money doesn't come with a worksheet. There is no universal right move. There are probabilities, trade-offs, risks, and outcomes. So without independent thinking, people default to the crowd. They buy what everyone is buying. They fear what everyone fears. They repeat what everyone repeats. They call it being informed. But it's often just being influenced. Independent thinking isn't being contrarian for attention. It's being able to ask better questions. How does this create value? What's the downside? What breaks this thesis? If I'm wrong, how much do I lose? Am I acting from fear, greed, or ego? Am I trying to prove something? If you can do that, you're already ahead of most people, regardless of how many degrees they have. So what do you do with all of this? I'm not going to tell you what stock to buy or what trade to take. But I will tell you what to build: a better money operating system. First, change the question in your mind. Stop asking, how do I get rich fast? Start asking, how do I stop being financially stuck? That shift alone moves you from desperation to discipline. Second, separate image from wealth. Buy less to impress. Build more to become free. The American economy is powered by consumption, and it will always try to hypnotize you into spending your future. Don't let your identity become someone else's revenue stream. Third, build rule-based consistency. Money is like fitness. No single workout changes your body overnight, but a habit changes everything over time. Track your cash flow, build margin, keep costs low, invest with patience, manage risk, reduce emotional decision-making. Consistency is a superpower because it gives compounding time to work. And here's the line I want you to take with you. Educated people don't lack intelligence. They often lack the right operating system for money. When you install a better system, built on ownership, discipline, and independent thinking, your life doesn't change through a miracle. It changes because you stop sabotaging yourself. You stop letting lifestyle erase your future. You stop letting fear freeze your progress. You stop letting hype control your decisions. And you finally give compounding what it needs most: time. If you made it to the end, I respect you. Most people want the result but won't sit with the truth. If you want more content about building wealth quietly, without hype, without gambling, without being controlled by the crowd, subscribe to Quiet Wealth. Turn on notifications, and share this with someone you care about. I genuinely wish you calm, clarity, and long-term financial freedom. If even 1 or 2 sentences from this video change how you think, then this was worth it.